Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do need to cover our disclosure disclaimer agreement. Main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. But that's the main point to take away. The headlines for today are similar to those of yesterday, except with more of a focus on the chart seeing red, including the Dow and overall markets in general, excluding oil, as crude oil has continued to spike and is definitely a different looking chart, we'll say, than a lot of other ones right now. So I'll leave that to the expert to further elaborate on, and very excited to interact with you all. So let's go ahead and kick off. Robbie out there?
I am Zach. Hey, everyone. Welcome to TradeFinder Live. Hope you're having a good Tuesday. Obviously, a volatile one as far as the markets. We are trying to scramble back from some of the earlier losses based on, I guess, the fact, we knew about the Iran military conflict yesterday, and the market was able to recover the entire downward move. Open at the low, finish at the high. Can we do that today? We have at this point in time filled this gap. I would feel that we're at least going to come up and test 680, and then we'll find out, are we just testing that level and destined to head down towards 650, or are we just going to buy this dip and then get back above 680 at the close? Those would be the key metrics that I'm watching for in today's move. Zach already mentioned what was going on with the oil markets, and we will do a case study consideration at the end, like we always do, but I'm going to go ahead and show you one now. So you're going to get a bonus one today. So two case study considerations, neither of which are going to be official ideas, because these are what we would do in the speculative portfolio at Evo Trader, because they don't follow the exact rule guidelines for any of those three primary portfolios. But they're just some of my trading rules and guidelines that I've seen over time that work a good percentage of the time. And we talked about how USO was getting separated from its 10-period moving average yesterday when we were doing the Evo Live show for our subscribers at evotrader.com, and then expected some follow through. I didn't really think we were going to gap up that high because now we're getting, I know one of our subscribers said that, yeah, OPEC did announce a small increase in production. I think it was 250,000 barrels a day, which isn't that big, just to kind of calm things down. And you can see it didn't work. There's still concerns with Iran shutting down the Straits of Hormuz, etc. One of the main transportation lanes. It's not the only way to get oil here, just takes a lot longer to go other directions. So it's a short, maybe short to intermediate term reduction in supply, but it doesn't kill off supply altogether. So my point here is that we were already extended from the 10-period moving average yesterday with this big gap up, and at the high here, we were way overextended. So this morning I did send out an alert in our speculative portfolio, because this is one of those very short-term trades that I look at. When you get this overbought and it's capped off with a big gap higher here, normally what happens, I say the next 1 to 3 days, but oftentimes is 1 or 2 days, you retrace back down a bit. I'm not saying we're looking to come fill the gap. We're looking to come all the way back down to the 10-day moving average. I'm saying very often you can make a nice little gain in a very short period of time, just getting some sort of a corrective move back down. So, you move down 5 points. We haven't even gotten back down here to where the top of the bar yesterday was, but that would be a nice trade. So I wanted to share that with you early, and then we have another one that we will do towards the end. But thought I'd share that with you. When we're talking about oils, I mentioned it in the beginning, so we'll just get that out of the way. So back to the SPY chart again. We're just gonna look and see what happens if and when the S&P reaches back up to 680. Um, the commentary on the financial networks take it for what it is, but it does seem to be the way the futures market is reacting. The futures market is reacting quite differently than the equities market is. The equities market bought the downward move. They're buying it so far today, and um, we'll see who's right in the end. But with where we are at this point, a little bit below the 10-day moving average, 10 period moving average. People always correct me on that. I'm just used to looking at a daily chart. So even a move back up to 680 doesn't even get us back to the 10 period moving average. So I feel like we get to 680 and then we rest it, pardon me, and see if that is a resistance point now, or if we look at this as a head fake and then we get back above there from people that are wanting to short. The more shorts that we get in here, the greater chance that we have of a rally if the market can move higher, because then the shorts would have to cover. So it's pretty interesting times in the markets to see where things go. Looking at RSP, which I've been showing a lot lately, which is the equal weight ETF for the S&P, had been performing so well, greatly outperforming the SPY. Even that took a hit this morning with the futures. They pretty much brought down everything this morning in the equity market. There's a few that are up, but a lot of red on the screen. But it has held right at the 50 period moving average so far. Can we bounce from there? Uh, you can look at that and say, well, it's a little bit oversold from the 10 period moving average, but not that much. However, and this question comes up so many times, how far is too far from the 10 period moving average? And I wish I could give you a blanket percentage, but it doesn't work that way. It varies from security to security. So what you have to do is go back and look and just get an idea. Just eyeball it. Look and see how far away from the 10 period moving average does this particular security get before it corrects back down towards it. And you can see on the RSP, not very far. You know, that was too far and we came back down. That was too low and we came back up. And you see that over and over again. So then when you look at a day like today, that's a little outsized to the downside, outsized as far as the separation from what we've normally seen, what's been the norm there. So with that, you would look and say, maybe we're due for a little bit of a bounce back up here on the RSP. So we'll keep an eye on that, see how that plays out. Looking at the VIX real quick. Again, don't want to spend a whole lot of time on the VIX, but we did get a spike up to 25. We haven't been there since November. And is that it? Last couple of times we've gotten that high, we've had pretty good rallies right after that with big drops back down. So unless something really nefarious is going to happen and we're going to explode up in the VIX, at least since the last 6 months, this has been a level where volatility has peaked out and we've started to come back down, a la move up in the equities market. So that's what we'll keep an eye on as far as the VIX. That's about all I have to say. That's all I have to say about that. Sorry. And then we'll move to the bond market, which I think is really key. And notice what's going on here. Not what you would think. And as I talked to our subscribers during Evo Live yesterday as well, perhaps a green shoot. That's an expression that goes back years ago. The market used to talk about when there was something a little positive in the economy, a little positive in a sector, et cetera. They call them green shoots. I haven't really heard that much lately. Maybe they still say that, but my point here is on the longer end of the curve on TLT, prices are coming down. So that means yields and rates are going up. And remember, we were talking, and I even talked about this in the US market update over the weekend, which I hope everybody watched. We had basically a pancake down with the interest rates, meaning across the yield curve, rates went down on all maturities. And that's not what you want. You don't want a flat yield curve. You want a steepening yield curve. Allows financials to have an easier time because they borrow on the very short term and they lend on longer term. So they make the spread. It's a lot easier for them to make money with a steepened yield curve than it is with a flat yield curve. So on the longer end, rates going up, and that's positive as far as the yield curve if we're going down on the short end. And then on the other side, it's a little counterintuitive, isn't it? That with all this um, but conflict, I'll leave it at that, going on with the Iran situation. I didn't want to use any words that were stronger than that, but um, wouldn't you have thought money would have gone into the bond market and money would be fleeing the equities market, going into the bond market, and we would see prices going vertically up, similar to what USO did? Hadn't happened. In fact, the opposites happened. So we're going down in price and up in rates. So somebody's selling bonds. Is it the Federal Reserve? Are they getting ready to inject liquidity from here? We don't know the answers to that. All we can do is speculate. Now we go and look at TNX up until today on the short end, and I think this may reverse itself by the close of the bond market today. But we had a nice move down on the 10-year. 10-year is not quite the short end of the yield curve that they look at for steepening yield curve, but it's definitely shorter than 20 years. So it gives a little indication of where the viewpoint is on the shorter end of the curve. And then today, the futures were so ugly. Yeah, some money left the equities market and went to park here. But if this attempted rally that we have going on right now can hold, then perhaps we see that come back down. Um, and that would help towards a viewpoint, at least, that the yield curve is steepening and maybe healthier economic conditions are on the way. I think that's what we need, and we need liquidity. We need the Fed to do what they said they were going to do, which they haven't been injecting liquidity. They did a little bit, took most of it back out. A little tick up last week if you watch the US market update, but nothing compared to what they said they were going to do. And that's why the equities market is struggling, in my opinion. Very difficult for the equities market to go higher without that liquidity from the Fed. Taking a look at the dollar, after we look at the bond market, as you would expect, a big move to the upside here. Been talking about this triangle and that the dollar was going to move. And so there's a breakout. Now the question becomes, is that a breakout and run, or is this a false breakout and we move lower? Nonetheless, the dollar has broken out of the triangle. We just have to see which of the breakout rules it chooses to follow. A lot of people on the financial networks feeling a sense of relief on the dollar moving up with this conflict with Iran, showing that the dollar is still viewed as kind of a currency of last resort, if you will, a place to park money in times of uncertainty, etc., and that's um, a calming effect from those sides of things. So, yeah, um, pretty happy with where the dollar is right now. Now we're back into my Goldilocks channel that we had all last year. So all that's good. Let's take a look at the metals market. I'm not going to really go through too many of the other markets. I will look at the IWM and the Qs. We'll stay away from the Dow for now, but they all look pretty similar to what's going on today. So not a whole lot of differentiation, if you will. But this is pretty interesting to me. Um, look at that move in gold today. Yesterday made sense, right? The conflict comes out, flees to hard assets, more conservative viewed assets, and then boom, right back down today. Why is that? We had already tested the point of the breakout of the triangle last week, at the end of last week. So we didn't need to do that again, even though that's right where we are today. We did close on a doji yesterday, which probably gave you a little bit of indication that maybe something was going to happen today. But, if there's that kind of fear over this conflict, hard to imagine that money isn't going here. Now, one of the theses that I read on why the metals might be selling off is with these big down opens that we have, and this is another one of those. I don't want to call it tricks, but this is another one of the gimmicks that some of the bigger traders do is they sell the futures hard overnight. So you come down and you open lower. And we do know that people are heavily leveraged right now. Um, just leveraged to the point where they don't have any more leverage to go. Um, and then you have a big down open, margin calls go out. And that's a way to siphon out some of the weaker hands. It's also a way to try to discourage being over leveraged in your trading because that takes on too much risk. So you can kind of understand why that would be. And then you take a look at where we are at these past 2 days. Same exact thing going on, in my opinion, is that we're getting a bit of the margin calls wiping some people out or forcing them to get out of their positions. And that allows those that shorted the market to take their gains on the open. And then they can also take advantage of the longs that have to sell because then they can step in and buy. And so that's kind of what's happened yesterday and today. So we've had these lower opens, margin calls go out, and then as those people are selling to meet the margin calls, the big boys are stepping in and buying. It's an easy trade when you think you got to be pretty powerful and be pretty large to do it, but doesn't that make sense? So those are the kind of things that goes on. And when people question, why do the futures open so low and then we rally throughout the day? Well, I just gave you a reason why that happened. So hopefully that's a good insight. And then I did want to show UNG. I was joking about it yesterday when we had just a tiny tick up. And I was like, well, last time we were worried about an Iran conflict, we did get a little bit of a bid in the UNG, worried about the Straits of Hormuz being closed. And that's what Iran's done. They've blockaded it. So, but that didn't seem to do much yesterday. A little more follow through today. So let's see how long this bid in natural gas can hold. Perhaps a little bit of a time, maybe not. But for now, interesting nonetheless. So hang on, just multitasking here. So I'll be right back. All right. So um, not not much of a bid in natural gas, but it is back at its 50 period moving average. We'll see if it can continue up from there. If it does, great. But I find this, as I've found natural gas for over the past year, very difficult to trade. at this point in time because it just the patterns don't line up in a symmetrical way other than this one zigzag we had down here. That was nice. That was right to a T with a 38.2% B wave. Gives you an expectation of a 61.8% extension. We got that. So that was nice. Other than that, been pretty challenging. So if we move into the Qs, which I think is another market to look at in addition to what's going on with the small caps, can we get back above 600? So both the S&P and the Qs broke their support levels today. Is it a head fake? Is it a one-day thing? Or on this rally that we're having right now off the lows of the day, are we just going back up to test these points that were support and now become resistance? Or are we going to just jump back up and it was a true head fake? Again, shaking out those weak hands plays right into the scenario that I gave you on why the futures open so far down and then the market gets bought with the margin calls that go out. If they can force the futures down far enough and the market opens low enough, it sends the margin calls out. So, another psychological thing that happens to newer traders, those that aren't experienced, that margin call notice is worded in a scary manner, in my opinion, on purpose, but it doesn't need to be. You don't have to do it immediately. You could wait out the day and see where it goes. Position needs to be covered depending on what kind of margin call it is within a relatively short period of time, but people panic as soon as they see it and immediately you have at least the day. So if you hang in there and wait for the market to rebound, perhaps by the end of the trading day, you're not in a margin call situation anymore. Rather than panicking and selling at the lows and then only to watch the market rally throughout the rest of the day and then be upset that, gosh, if I just would have waited, wouldn't have had a margin call at all. But the season, big boy institutions, et cetera, they understand the psychology of the average retail trader, that as soon as they see a note like that, it's like being assigned on an option, sparks fear, and it doesn't need to. So anyway, I'm off my soapbox now. And then we'll take a look. Well, what we need here is, can we get back above this 610 level on the Qs? And if we can, then all this could have been is a shakeout move and utilizing the fear from the conflict in Iran as the trigger, because they obviously have a reason. IWM, same thing here, broke out of its triangle and we're coming back. We bumped our head on the 50-period moving average, but by now we're a little higher. Can we get back above? Because that's the support level that broke today, but it's trading above it even already. That A wave high on the zigzag on the way up and the lower end of the symmetrical triangle. So are we breaking to the downside? And so we broke down, we're testing it. That's one of the three ways triangles break out. And then we're going to have a more significant downward move. Or is this simply a head fake and the breakout will actually be higher? So either of those scenarios are still in place. All right, Zach, with that, we'll open it up to the Q&A and then we'll come back. You won't have too much to do since even though we're given a bonus case study today, we're not going to do any official ideas. They're both going to be posts. So
Very well. Sounds like a plan. Let's start out here with a question from Will. Let's look at SoFi. Financials holding up for today anyway.
SoFi. Man, this stock moves all over the place. You have really nice rallies and then other times when it's kind of a little bit squirrely, but let's take a look at it here. Sorry, still multitasking. That's what happens when you have a volatile trading day. It's fun. I've been talking about this. I've been waiting for this kind of stuff for a while. Um, Things happen fast and furious. Zach, you excited about Formula One starting again this weekend?
Oh, very excited. It's um it's been on my mind since last season ended. So yeah, very excited for that and for UFC card this weekend. It's a
Oh,
action-packed weekend ahead.
yeah, the BMF fights.
Yes, sir.
Yeah. All right. So, I'm sorry. What was the symbol? SoFi.
So far for Will, yeah.
How did that come up? Have they changed their symbol? No. Yeah, they have. THTA? Or am I looking at the wrong one? Let me try again. Sorry about that. All right. So now we have the right one. Um, Down here at 20 was big support that needed to hold, and it was really trying. And we broke down, and this is what I was talking about as far as the S&P and the Qs. Is this what's going on where you break down and then you just come back and test support, and it now becomes resistance, and you move lower? So I think it's hands off SoFi until we can get back above that level there. If you're looking at it from a short uh, aspect, then you could take a aggressive short position right now. I tend to think that um, when you bring fundamentals into the mix, I would kind of stay away from doing anything like that, um, because if the yield curve continues to steepen, and it may not, but if it continues to steepen, it should put a bid back under the financials that have been struggling over the last week or two. So from that standpoint, I think it's a little bit of a scary kind of a short. But on the other side of things, you have a very low risk here. If you short it and it breaks back above that line there, you just simply get out. So your stop's relatively close. But that level is 1950. We can round it to 20 if you want. But the idea would be to go long. I would want to see it back above 20. So if you entered short, your stop is if it breaks above 20. If you're waiting to go long, I wouldn't even step in till it broke above 20. But it is getting a little separated from the 10 and 50 period moving averages. So with that, we could see a little bit of a bounce there, kind of leading, um, so where you'd lean a little bit more towards the bounce higher scenarios there. But 1950 is actually the way I've drawn the support line. But if you wanted to be just even a little more conservative, let it get closer to 20 before going long.
Next up, let's head over to Ford for Lisa.
Good old F. I've
While
been
you're
talking
heading to,
about this.
sorry, go ahead.
No, finish.
I was just going to say, while you're heading over there to Ford, I got asked about my thoughts on Cadillac, and said I'm very excited about the car. Same with Audi, and going to be interesting to see how that holds up with the pack. So I figured just get your thoughts on that as well.
100%. Yeah, it looks like um, you know, I haven't, I didn't see any of the testing. So I know they tested it over the last 2 weekends in the testing sessions they had. I think it was in Bahrain. I think it's where they were doing the testing. Um, at least from the photographs and videos, it's a cool looking car. I'm excited to have another American team in there. So I think that's all cool. We'll see how well it performs once it's actually in action. Ford um, had a pretty nice run, ugly few days. I believe that was earnings, wasn't it? No. Um, but following earnings, I'm not sure what the news was that caused this move lower. Um, but um, something negative came out. It may just be, well, what's going on with, um, there's concerns I know about supply chains with the conflict and what interruptions uh, with manufacturing and shipping, et cetera. I don't know if they're dealing with that. I'd have to do a little more research on it. But as far as the chart itself, I think that's pretty clear. The wave five ended and it's marching its way back towards the previous four. You don't often see it move like that. Vertically, we're approaching the four. We're oversold. It may not have done this if it hadn't have been for the Iran conflict stuff over the past two trading days, which have been rough days. So perhaps we would have just kind of hovered here. 14 was support, and that's part of the reason why it went so vertical is it broke that support line, and then people just sold, the old sell first, ask questions later scenario is what played out. So pretty big move down there. And now we kind of I would look for a bit of a snapback, especially in a stock like Ford that's not normally this volatile. So we're a little separated from the 10 period moving average. We've continued to rally up a bit here in the markets. So I'm not exactly sure where Ford might be at this moment, but it's got to get back above these major moving averages. You can see the 10, 30, and 50 are all converging at the same spot. So if you wanted to be real aggressive, you could do that snapback trade that I just showed you with oil in the opposite direction, USO coming down. Works the same way the opposite direction. If something goes vertically down, you can see it come back to the upside. And I think it should come near that 50 period moving average, if nothing else. So that would be a quick potential position. If you're looking for, I want to be long forward over the long haul, perhaps wait until it breaks above 14 and starts to follow through with what's occurred here in this wave five. See, the last time it tried to break above 14 and got pushed back as well, the last two times actually. So getting above 14, obviously there's a whole bunch of stops and the short step in every time it breaks that and try to push it back down. But if it can make a sustained move above 14, this is why I'm saying if you wanted Ford for the longer term, let it get above 14, because if it can hold there for a sustained period, those shorts are going to have to cover and then you get your run. So I think there's two plays here on Ford, a short-term bounce and then a more um, intermediate term, I'll say, position if it can make it back above 14. So I'd keep a close eye on it.
Very well. Got a question from Eric. Are you using the SCO for the USO trade idea or puts?
I am not. I have something different, which is why it's going to be a post. But um, good on you for trying to sneak in what I'm going to say early.
Next symbol is going to be PLUG.
Plug. Well, the whole energy sector has been doing a bit better, as you can imagine. And there you go here. Been a while since we've seen a day like that. It's been low. The problem is it's got to get back to five somehow before it makes a sustained move. But maybe if this can get enough um, retail type support on it and continue to move higher, um, you could see a more sustained move. What we don't want to see is what happened back here. I mean, it's just one day today, and energy stocks doing well, but this vertical stuff. So you don't want to see too much vertical follow through. Comes right back down, and you hear me talk about this all the time. What goes vertically up comes back down. What I'd like to see is, okay, we broke out of a lot of consolidation. Now let's just kind of creep higher in a 45-degree angle. The problem is you don't see that as often on these stocks that are below $5 because in that scenario, there's not really institutional buying. The institutions can't buy until it gets above five. So you see this choppiness and more um, volatility on these stocks that are down lower than that. So
MU.
good old Micron. That's a good one. So with Micron, um, again, you take today's move with a grain of salt. The rally is still continuing at this point. So maybe they're able to recover all or most of the downward move today. And perhaps by the end of the day, Micron's back to its 10-period moving average. I've been saying this for a while. I think that Micron and SanDisk are where the action is in the tech side of things right now. And you can see that we do have this triangle. I've been talking about SanDisk breaking out of this triangle for a while. It's my favorite setup when you run up vertically and then have a symmetrical triangle. But this could be a head fake and the big move higher. That's still a possibility. We'll see where SanDisk closes at the end of the day. Let's see if I can tell you where it's trading right now, just to give you an idea on both of them. 590, so it's quite a bit higher than where we were there, but it's not back up to the trend line yet. So keep an eye on that and see if this is a head fake and we continue to move up from there. But for now, um, Micron and SanDisk, I think, are the two that you really want to watch at some point in time. I do think NVIDIA, Broadcom, some of the other ones that were leading get back into the mix. But for now, the action is Micron and SanDisk. So I think on both of those, you got to wait and see, does the rally hold into the close? And it's a no harm, no foul scenario. And we go back to work tomorrow, um, taking all this Iran conflict volatility out of the mix. And then you could see both of these move higher with Micron. You just have to see it get above right here. It doesn't even have to go back and test that wave three high. But for me, if you're looking to enter a new position long on Micron, if you're in one and you're concerned about this downward move, I'd hang in there. Let's see what the market can produce towards the close today. But for now, breaking above 426 would be your entry to go long.
INDO.
Oops. Indonesia, and I see why you're looking at this one. Another one of the lower dollar stocks with tons of volatility. A lot of stuff going on with EEM again as well, emerging markets. But it's the same story. You got to get it to 10 to get the big boys in, but at least you now have, being above five, the aggressive investment objective investment companies. So if it can hold here, and it looks like it's trying, this may be something here because five was resistance, and it looks like, let's check the volume, see if that was institutional. It was that pushed it above five. So they're trying to push it up to 10. So they saw an opportunity here with some stops at $5. And so institutions came in and bought it. And then you see if we can hold five as support now. I would watch this closely. I'd be a little cautious right now unless you're super aggressive because it could drop back below five if there's no further support there. But somebody's trying to push it to 10. So if five holds the support, yeah, I think that one could really run. but there's a risk that it falls back down. Just have to keep an eye on it and see over the next couple of trading days. But yeah, good stuff.
Very well. Question for Maria. How do you track the yield curve to understand changes?
If you go out and Google, there's various places. A lot of the investment banks, the Fed does, one of the Fed sites, but there's a lot of places that track the yield curve. So it just depends on, I would say pick one, and Market Watch has it. So just keep an eye on it, and we're going to have it here on this platform. Um, Let me see. Let me just double check real quick. They've had a couple of new releases. Um, I'll find that out for you, Maria, and I'll tell you Thursday night at the in the insiders meeting. I'll double check on that. I know it's coming here on this platform, but for now, they're just Google it, um, and make sure you get a chart, because some places just put the data on there, but you want to see the visual of the yield curve. And then the legacy platform had it, and I know it's coming here. I just don't know if it is yet or not. I'll get back to you Thursday night, Maria.
Very well. BATL.
Battle. Battalion Oil. Not much of a shocker there, is it? Um, that's another opportunity, in my opinion, to do that quick fade trade. 1 or 2 days back down. Um, Makes a lot of sense to me. That's not going to hold. Um, Maybe it goes sideways for a while. Eventually, this conflict will end. And I think these concerns about disruption are overblown. I think OPEC could step back in again. Um, no, I promise you, OPEC doesn't want to see this price up this high. And if it looks like it's going to be sustained a little higher from the Iran conflict, then they will increase production more than that 250,000 barrels yesterday. Quite confident in that. So, no way I ever chase anything like that to the upside. In fact, look the other way. Again, it doesn't have to come all the way back down to 10. Doesn't have to come down and fill this gap, but you can get a nice trade on just a reflex move in the opposite direction. But yeah, that's a good one to look at. I'm going to check out what the options look like there. They don't have options, so you'd have to short the stock. So that takes that out, but you can do the USO instead.
Alrighty. Golf franchise says I'll give you two stocks in a bull trend. One being FET.
FET. Well, energy. Yeah, that makes sense, because that's a sector that's been performing well. Nice little consolidation here. This is institutional buying. Remember I was talking about that, where you get the little bars, but you don't normally see that on stocks under $10, especially not under $5. When you see this, that is an indication of institutional accumulation. That's exactly what it looks like. So there are some big institutions that are taking a position here. And then, as what often happens, likely some retail people saw it and said, hey, that's making a nice move. We want in. The FOMO kicks in, you go vertical, and then it needs to calm down a little bit. And then you hope that it starts to resume this kind of a move. Because oftentimes, if institutions bought way back in here and then you get these spikes, unless they're committed to this really long term, they'll sell on that. Um, so that's where the danger is when you get the vertical move. If it just consolidates and then starts to tick back up, then they're staying put. They're in it for the long haul. But if they just were looking for it as a profit making position, they probably sell when you get that spike. So you just kind of have to watch and see what plays out. But no doubt, not all the institutions have gotten out, and that looks pretty darn good. Um, yeah, just really high ADX and very strong move. So I don't think you're going to see too much of a volatile correction. That might be all it gets. And then we go sideways. We'll just see if it has momentum to make another run higher or if we're just going to kind of churn here for a while. What was the other one?
The other one was CNX.
Yeah. Nice move to the wave 5 there. Moving into the bottom of the tap box. And how much further can we go from here? We're a little separated from the 10 period moving average. We took out the wave 3, so it labeled the wave 5. And it's right at, if it can hold right here, it could take another run. It got a little bit overbought, a little separation from the 10 period moving average, and it's correcting that right now, and it's doing it the way you would like without any sort of vertical down stuff. So just sideways churn here, and then try to resume the move to the upside. So if you're in it, I would tighten the stops right around this level here, and give it an opportunity to see if it wants to make another run. If you're looking to enter, and you're aggressive, you could try it now because this is that, better risk reward scenario where you're right here. If it breaks that, you get out. So if it can bounce up from here, if this is indeed going to be support now that was resistance and run, then you're in. But if it breaks below it, you're out. So you have a quick stop. So not a lot of risk, minimal loss, and then move on to something else. But yeah, we like it.
AVGO.
Yeah, I mentioned Broadcom before. They're going to come back at some point in time. Um, it's just been, let's look elsewhere lately. Even as Jensen Wong is out there trying to get people excited about his stock again, Nvidia. We can't have more work. It's, the backlog is there for a long period. Anyway, he's singing the praises of it, but nobody's biting. And it's the same thing with Broadcom right now. It's an anti-AI area right now. SanDisk and Micron again are where it's at. We are coming down. We had these two levels of support. So we broke this first one. We're coming to the second one. We broke that one, and came down and already hit that 300 level. Um, we'll see where it closes today, but that's some decent support. It would be hard for me to imagine Broadcom breaking below 300. It could happen. The market does things that are hard for me to believe all the time, but I feel like these stocks are going to get to a point where people say, okay, we're ready to get back in. And maybe that 300 level is it for Broadcom. It tried once to bounce off of it and run, and it couldn't hold it, and it rolled back over. So perhaps it comes down and tests 300 again, get a little bit of a double bottom there, and then see if we can turn and move higher. So, yeah, keep an eye on that.
NTR.
Um, Really interesting chart. Very similar to previous one that we talked about. What was it before Broadcom? Um, Almost the identical chart where we broke above resistance and we're back sitting on top of it now. So if you're in it, this is your stop. As long as it holds above here, you're good. Stay in. And if it breaks below that, probably be a good place to take profits and wait for another entry. So right around 72 and a half, we'll call it. We'll give it a little bit of a buffer to the downside. If you're wanting to get in, you go now. And your stop is right here. So again, another one with low risk on the entry. It breaks below that, you get out because it's coming to 70 if it doesn't hold this. So 72.5 doesn't hold, it'll see 70 in my opinion. So that's why if it breaks below that, exit, see if it holds 70. Because if it gets down to 70, then it brings in a whole nother bale of hay, if you will, because of breaking below 70. Look at this move from 60 to 70 was really vertical. So if it breaks down and it's trading around 70, nail biting time, because if it were to break below 70, I'm not saying it's going to, but if it were, it'd see 60 real quick, and that'd be a heck of a move down. So you don't really want to mess with that. So your stop is right here, 72 and a half. If it breaks that, let's see if it holds 70. And if it can hold 70 and get back above 72 and a half, that would be your entry. And again, if you're in, just watch the 72 and a half level, stay long until if and when it breaks below that, and that's your exit. All right. So, Zach, I'm sure there were more questions, but at this point, I'm going to show the case study consideration and get back to the trading day. Let everybody else get back to it too. This is highly speculative, but looking at CRCL, and dang, it's already moved more. Um, well, it wasn't quite that high earlier. Um, so maybe we need to wait a day on this. Again, this is a post. This is not a true idea, but I think CRCL is coming back up here. I think it's coming back to 125. And it made that nice clean break today. It's having a follow through day. Maybe it backs and fills for a day or two after this. Good bullish 1030 cross. I think CRCL sees 125. So that's what I would be looking at there. And so, yeah, as a reminder, Zach, I don't know if you want to show them how to get to the social media aspect real quick for those that may be new, but again, we don't need to go through the full blown showing them how to post an idea since it's just another post.
Yeah, no worries. Sure, I'm happy to do that real quick. I'll take the screen. So to get to the social media aspect of the hub platform that Rob's referring to, we'll just come here up to the light bulb for ideas. And this is where the list of ideas would be as it populates. And then for any posts, which is what the two that Rob covered today are going to be, those will be found in the My Feed section. So as you scroll down, you'll have the option to interact and make your own posts if you like. But as you said, Rob, it's quite the volatile trading day. So I'll pass back over to you to add final comments and thank everyone for joining us live. It's always a pleasure to interact.
Yeah, absolutely. And yeah, a couple ideas there for more shorter term stuff. We'll see how they play out. And thanks as always for spending some of your trading day with us. A little distracted here because there's a lot going on, but it's fun when it's volatile like this. It's fun to trade. So enjoy the rest of your trading day, and hopefully those of you that are subscribers will